qualifies. And let's do this in plain English. It's going to be any money that you earn outside of a normal W-2 paycheck. And I'm going to give you some common examples. So it's going to be things like Uber, Lyft, DoorDash, Instacart. If you're going to sell things on platforms, so we're talking about eBay, Etsy, Facebook Marketplace, Amazon. Freelancing work, that's going to be a big one too. And we're talking about if you do design work, editing, coding, marketing, consulting. If you do social media work, even if it's in smaller amounts. So we're talking about income that you receive from YouTube, TikTok. If you have affiliate income, sponsorship income, that's going to qualify. Another one's going to be cash jobs. So if you get paid cash or through cash platforms. So we're talking about like Venmo or PayPal or Zelle. And here's the big part that people miss. It doesn't matter if it was part-time, occasional, seasonal, or just for fun, like a hobby. If you received income in exchange for a product or a service that you provided, then the IRS expects that to be reported on your tax return. So a very good question to ask is, why is the IRS cracking down so hard right now, even on smaller amounts, especially on side hustle income? So I'll tell you that simply put, it's because they can, like they're capable of it with the technology. So what I mean by that is that platforms track transactions, marketplaces track sales, payment processors, they create records, and banks, of course, track deposits. So the IRS identifies who to go after using the matching strategy. And listen, you need to understand how they're doing this to avoid becoming a target for the IRS. So here's what happens, essentially. The IRS compares what you report on your tax return and what third parties report to the IRS about you. And when those numbers don't match up, then a computer is going to flag it. Essentially, it's an automated system that notices a mismatch between what you report and what others report about you. Now, I want you to know that this is the number one trap. This is the biggest mistake, and it's people think that the side hustle income that I received, it's too small to matter. So a lot of people are going to say, like, I didn't make that much money for my side hustle, so, they're not going to care. So I just want to clarify this for you. In your previous experience, let's just say like you made some money and you did not report it to the IRS and nothing happens. It's not because the amount you made was small. No. You didn't get an IRS letter because the IRS didn't see it and they didn't know about it. But if they see your income, the size is not going to protect you. So I want to give you a quick example. So let's just say that you made $2,200 from a side hustle and the payer sends you a 1099, okay? And your tax return shows 0, like you didn't report it. Then the mismatch is going to be clean and obvious. And that's the kind of thing that's going to trigger an IRS letter. So in this scenario, even if you made $2,200 and your expenses were greater than that, meaning that you had 0 profits and 0 taxable income, all the IRS is going to see is that you received $2,200 and they're not going to see your expenses. And then they're going to try to get you to pay taxes on that gross amount that you made, that $2,200 that you made, when in reality you shouldn't. So I'm telling you, it's best to report it properly, record the proper amount of expenses as well, rather than getting an IRS letter and then having them put you through an unnecessary and overblown, I'd say, witch hunt. Now, I want to tell you about this mistake number 2 that I see gets a lot of people in trouble. It's when they wait around for a 1099 tax form and then it never appears and they think that they don't have to report it. But it doesn't work like that. So here's a rule that's going to save you for you to understand and know. You must report your income, whether or not you receive a tax form, okay? So if you don't get a tax form, that doesn't just magically erase the income. So a silly mistake that I've seen my clients make is that the 1099 tax form was sent to them, but like it truly got lost in the mail. Or they didn't realize that they had to download it, their 1099. And they thought that because they didn't receive a copy, that income was never reported to the IRS. And their excuse, there's so many excuses, but they try to use this excuse that, I never received the copy. I never received a copy of 1099. If you say it to the IRS is not going to care. If there was a mailing problem or a communication problem, the IRS is going to say that you should have known about it. It's your responsibility to report it correctly. So I'm just telling you, like, that defense is not going to work. And mistake number 3 is that a lot of people that are working in the cash economy, they think that their cash payments and cash apps are going to be invisible, to the governments. And I'm going to be honest with you. Like if we're talking about cash payments, it's more difficult for you to be on the IRS radar. Like I'll tell you that in all honesty. But in practice, if you get cash, then a lot of people with that cash, they make deposits, they make payments, they make transfers, etc. And if you're ever going to get audited, then your paper trail is going to be so obvious to an IRS agent, and patterns are going to matter. So like if you get paid in cash, if you make a deposit of cash every week, or you have consistent payments through apps, then the IRS is going to question it. If you can't explain it with your records, then you're going to be on the defense. And mistake number 4 is when people mix personal and business money. Now, I want to tell you about this mistake in the event that you do receive an IRS letter. And this mistake is going to cause chaos at tax time. So if you run your side hustle through your personal bank accounts, then you're going to create a documentation nightmare. Just think about it. Your side hustle income and your personal transfers and transactions are all going to get mixed together. And then you're not going to be able to easily prove what was related to your side hustle as a business deduction and what was personal, and your legitimate business expenses. Like you can overlook them and you could forget about them because they're all mixed up. And then you're either going to overpay taxes because you forgot to claim real expenses related to your side hustle, or you're going to underpay taxes because you're just guessing.